Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Wednesday, August the 4th, 2010, and like we do every night, it's time to look at the markets. Check it out. Okay, let's start off looking at the FTSE, the London Financial Times Index. I like watching this chart. It's a good reflection of what's going on over there in Europe, and so I like to keep an eye on this here. Basically, there's a lot of news out there. There's truth, there's lies. It's all, a bunch of uh, stuff you get to dig through every single day. And the main thing to take away from this analysis is that there is problems here in the U.S. that are our, economic situation, our unemployment levels, and all that stuff, and that is playing on the markets a lot. But at the same time, there's the big problem, and that I keep believing is going to be the thing that's going to take us down, and that is the European credit crisis. I know people keep trying to say it's over, but it's nowhere even close to over. So I want to pay attention to that, and the chart is confirming my analysis on that. One of the last signals you can look for, let's go over them all first, but you obviously have an overbought condition. Once the slow stock is up above the 80 line, you're in overbought. You need to be looking for short opportunities. That's what you've got right there. You'll also notice, let me read that. You also notice this downtrend here between these low points versus this uptrend here between these low points. That is a bearish divergence. It tells you to look for a sell-off. This thing is not to be trusted. Though it can continue to move to the upside short term, it will not be sustainable. Back here, you've seen the same thing. Let me show it to you right quick. Low point here, low point here. Okay, there's got one there. You've got a, let's see, find there's one here telling you the same thing. Okay, low points are trending lower while high points are trending higher. This one's here. It's longer term, going like this and this, and ends up breaking down. Okay, like I said, the market can continue to fight it for a short period of time, but sooner or later they pay the piper in spades. Okay, and that's what you've got here. So you've got all these bad signals, and again, if you move on down, we've talked about this before, you've got an inverted hammer at the low point here. This is not a hammer formation. You need a hammer to tell you there's some kind of a support here. There's no support there. You've got an inverted hammer telling you there's not support here, and you're actually going to go lower. So we know that as well. Okay, lots of bad stuff there. This is important to keep an eye on. You'll also notice that while price activity is still continuing to trend higher, you're already seeing the momentum fade lower and a tightening of these moving averages of the MACD, which is going to lead to the bearish crossover like you've seen back here. Okay, nothing new going on here. This is just a bounce, which is going to fail like all the others, and we get to go lower. All right, and that's important because it draws down the overall markets, the world markets, And this guy, the FTSE, is showing a great deal of weakness right now as world markets are still posting gains, small gains and on low volume, but they're still pushing higher while the FTSE is unable to do so. And again, you'll notice, like we talked about before, you've already got the inverted hammers in this case. You could go for 3, 2, however you want to count it, but they're already there. And that's the last item we look for. And it's the only item we're missing from the Dow Jones and the Nasdaq and the S&P and so forth and so on. But it's already there on the FTSE, and I want to keep drawing your attention to this because it's a really important piece of the puzzle, and it's going to come into play. So keep an eye on that. Okay. And again, I am 100% a bear on the FTSE. Okay. Okay, now here we are looking at the Dow Jones Industrial Averages, a 6-month chart, each candlestick being 1 day. We have ultimately the same conditions here as we do on the other charts. We've got the overbought condition of the slow stocks we talked about here. We don't yet have a bearish divergence or a signal to the downtrend by the low points of these. You'll notice the low points that I talked about right here. Okay, these guys are still trending higher. All right, so that would be still more strength in this chart than there is in the FTSE. Okay, but having said that, you have to realize that this last low point was way up here, so it's backed itself into a corner. Sooner or later, it's going to make another low point. It's going to be lower than this one. Okay, so you're right there on the edge. Okay, and keep that in mind. And again, once the slow stocks pulls up to the overbought 80 line, that's where you want to be doing your shorting. Look for your short opportunities. That's what the market's telling you. That's what the chart's telling you. It says look for short opportunities, not long opportunities. Even though we're still moving to the upside, it's just a contrarian play. Now, again, we looked for today's to be to the upside. It was, but again, it continues to be on very, very weak volume, even weaker than yesterday's volume. So there's no, the higher this thing goes, you're not getting more and more people interested in buying it. You're getting fewer and fewer people. It's just not a quality move, and nobody that I have any respect for out there finds any value in this bounce up here. Market Watch came out a couple weeks ago and says since the low, about this point here, the bounce that happened from this low point, that every smart trader they monitor is become more bearish, not more bullish. So that should be a key indicator for you as well. And again, it's shown clearly on the volume anyway. But the main thing I want to bring this to your attention here is I showed you the inverted hammers on the FTSE. Again, I told you, I think it was yesterday, that it's the only item that's actually missing here. Everything else is telling you to start shorting. And again, you don't have to get an inverted hammer to break down. You see back here, you've got a shot to the upside and then a reversal, and she didn't give you an inverted hammer until she was halfway down that move, or partially down that move. So it doesn't have to be there, but it would be that much better for me if I saw that. So one item to note about that is tomorrow's activity is going to be important and could in fact create that inverted hammer, and I'll tell you why. You had to move to the upside today, even though it was low volume, didn't look good intraday or anything like that, but you may continue to try to press higher tomorrow morning. The thing to remember though is tomorrow is Thursday, so when they're trading, whatever activity they're going to do on Thursday, whatever they do on Thursday, they're going to probably sell it off at the end of the day to protect themselves against Friday's unemployment data. Okay, so keep that in mind. You're going to have a lot of data out on Friday that people are already expecting bad news from, so they're not going to be holding that when the data is going to come out at the market open or before the market opens, so they're not going to be able to trade on that news. So they're going to have to do it on Thursday. So you could actually see an inverted hammer formation tomorrow. So keep that in mind as well. Also, you could just see a total sell-off or whatever. Like I said, this thing is already overbought. It's absolutely unsustainable, and it's just a matter of time before she goes, rolls over. So that's important to note as well, okay? But all in all, like I've said before, there's still potential for a move to the upside if news surprises to the upside, or if they can spin a number that's not quite that bad and just say, okay, whatever. But don't look for volume to increase to the upside. This is not a situation where smart money is out there looking to buy this market. Nobody believes the data is bullish, and we're just selling the news. That's the game everybody's playing here. So now that you know everything I know and you're up to speed, if you've not been to our free website at perfectstockalert.com, it's right there. I could go over the S&P and the NASDAQ for you today, but it's really no different than the Dow Jones as my overall view. There's another gap added to the Russell chart. That's really a bearish sign there. You want to keep an eye on that. We're seeing a lot of these exhaustion gaps just telling us the overall uptrend is over, and we can point that out several different ways, but the indicators are all right there for you to see, okay? And back to my point. Again, we welcome you to perfectstockalert.com, and 100% free. All we ask in return is you refer a friend. I'd like to thank you guys for that support. You guys have been doing that exponentially, and every single week we break every traffic record on our website because of you guys' support, because you're showing our videos, sharing our videos online, and referring your friends and so forth and so on. So thank you very much for that. I appreciate that. I'm going to keep working my tail off for you. And again, thank you very much. I got to apologize to the guy I filleted yesterday. I was a little bit offended by your, what I felt to be a rude comment, and I took advantage of that opportunity to slice and dice you. I apologize. I should have done it better. Okay. And a quick look at our disclaimer. Okay, have a look at our disclaimer, read it and weep. We still got room in our live trading course for anybody who wants to follow us in our 100 perfect swing trade situation we're doing over there. You're going to watch me buy and sell every single one of those 100 trades, and the objective being 100 perfect trades, every one of them a gain. And it's going to be really interesting. It's going to start in a couple of days, so go to our website. You can read about that there, and love to see you there. Take care. God bless. Enjoy the evening.